Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Welcome to Digital Currents. We have a special treat today. I think we couldn't go one day in the news cycle without hearing about stablecoins changing the world. So what better person to invite to describe this than our very own portfolio company CEO of Stably and D-Trinity, Kory, who's dialing in from Seattle. Kory, want to welcome you, and this is normally the part where we will embarrass the guest and kind of give a little bit of the background, but I will kind of dive into this further when we kind of set sail here. But basically, you co-founded Stably. It's based in Seattle, stablecoin as a service, founded in 2018, and it's really one of the world's earliest stablecoin issuers. And, you know, it's got over 15 products to date. And basically on your end, you know, you've got more than, you know, a decade of financial services experience prior to that. And of course, that's kind of led you to this latest product in D-Trinity, kind of trying to dive in a little bit further in the world of DeFi. But Kory, want to send you a huge welcome. I think we're long overdue.
Yeah, thank you so much for inviting me to this podcast, Xavier. And yeah, really excited to tell you guys more about, you know, what we've been working on in the stablecoin space since 2018. So yeah, I'm Kory. I'm the co-founder and CEO of Stably. We're based in Seattle. We're a stablecoin development and advisory firm. We're one of the earliest stablecoin issuers, as Xavier has mentioned, and also one of the earliest providers of stablecoin as a service solutions. And we work with a wide range of clienteles ranging from blockchain foundations, some of the names that you may have heard of, like Stellar, Tezos, VChain, even Ripple. And yeah, also other more traditional companies like financial institutions, enterprises, banks, payment companies, even mortgage lenders. With the you know, regulatory tailwind of U.S. stablecoin regulations coming now, and the U.S. Genius stablecoin bill passing yesterday in the U.S. Senate, you know, there's a lot of traditional businesses now that are coming into this space, looking, exploring, launching their own brand of stablecoins, right? And we're perfectly positioned in this space in order to offer, you know, our insights and infrastructure, technical solution, as well as advisory services to help them, you know, realize that vision. And yeah, super excited to be here and tell everyone more about what we do.
Awesome. I think that was a great introduction, and perhaps we can go backwards to go forwards a little bit and maybe talk about our origin story, how we kind of came to know one another. It was a couple of years back, and I think it was a different time, Kory, right, in the industry. There were kind of like two models that were really used to be building in Web3. It was like to build as big and as fast as possible and not really think about regulation. You know, this was this idea popularized by Reid Hoffman, the blitz scaling. I think some companies like FTX took to the extreme, and we saw sort of the crumbling of that, right? And then there was this other model where you could still build a good business, but kind of do so with the idea of regulation and educating those in the space around you, and kind of having this not really a tortoise mentality, but if it's closer to the tortoise than the hare as far as kind of ensuring the regulatory apparatus. And when you're thinking about things like stablecoins, you know, when we saw you guys, we thought that this was an important idea. So maybe kind of thinking about, how did the light bulb go off for you when you guys were looking to, you know, do whatever it is in Web3, and you kind of settled on stablecoins really before they were super popular, right? Because at that point, like, people were still looking at Bitcoin. They were still in the wake of these ICO boom and bust cycles, and you guys focused on something which many kind of degens shy away from, right? Which is, oh, I'm going to link myself towards fiat.
Yeah, absolutely. So I guess the original inspiration or the origin story was back in 2017. I was still working at PitchBook here in Seattle. I was a private equity data analyst at PitchBook. And I've been working in the financial industry, for a few years before then. I was even Series 65 licensed investment advisors at one point. But yeah, while I was working at PitchBook, I was doing a lot of crypto trading on the side as well. I was one of those degens, which you speak of. And made a little bit of money in 2017. As you remember, it was a bull market. And I also met my co-founder at Stably, which is David. He is now he's been our CTO ever since 2018. But when I first met him, he was a software engineer at Amazon. He was working on like AI, machine learning related stuff at Amazon from like way back then, right? So this guy is super smart, right? And we click it off right away because we actually met at a algorithmic trading meetup. And so, I was giving a algorithmic trading strategy presentation about basically trading volatilities and things like that. And so he came up afterward and he taught me how how to hedge my strategy and improve the risk return profile even more, right? And so I thought, this guy was very smart, right? And so we kind of clicked right away and we became really good friends. And from trading, traditional instruments, we ventured into crypto together in 2017, and our strategies did really well. Well, I'm not sure if it was if it were the strategies or it was just the market going up, right? But either or, right? We did really well in 2017, and then at the end of that year, we decided to quit our job. He quit Amazon, and I quit PitchBook in order to start to found Stably and go full time into the crypto world. And the inspiration for Stably was, throughout 2017, while we were trading, there were no other stablecoins back in the day other than Tether, right? Other than USDT. And so, immediately we realized that, hey, stable coins, they're similar to money market funds, but just on-chain equivalent, right? Or they're similar to, money orders or like checks, but like, on-chain equivalent, right? And so, there needs to be, more stablecoin diversities, more players entering the space, right? And so in early 2018, we raised a small seed round for Stably for $500,000. And we started development on a stablecoin called USDS, which we launched by the end of 2018. We got listed on Bittrex, which if you remember, Bittrex.
Oh my goodness.
Crypto exchange from a while back. They're also actually used to be based here in Seattle too. Anyway, so we got on Bittrex at the end of 2018, but by that time, we even work with a regulated financial institution in order to sponsor the regulatory framework as well as the custody and licensing and payment processing and everything, right? And so by the time we launched at the end of 2018, it was actually a little bit late because, Circle and Paxos and Gemini and, Trust Token, many other stablecoin projects have already launched, and a lot of them were already listed everywhere, right? And so at that point, we, even though we thought we were late, we actually got an offer to get listed on Binance, right? And so we raised a little bit more money, and we actually became the fifth stablecoin to be listed on Binance in early 2019. And I didn't pay any listing fees for that deal. That's wow. Something I've been proud of. So
yeah, that's not going to happen today, right? Today, get ready to fork over 20% of your treasury.
Yeah. Well, I don't know about today, but yeah, definitely back then, we had a really good deal from the Binance leadership team back then. And so, they supported us. And then we got listed as the fifth US dollar-backed stablecoin on Binance. And within 6 months of being on Binance, we realized that we inadvertently caught ourselves up in a stablecoin war that was ongoing at that time, right? So a lot of the so long story short, a lot of the stablecoin issuers were giving out incentives to market makers in order for the market makers to issue stablecoin, redistribute it into the market, and using market makers to act effectively as wholesalers, right? And so what these incentives could come in the form of, for example, stablecoin discount, right? So you could mint a stablecoin from these issuers at a penny or 2 penny discount, right? But they wouldn't let you redeem these stablecoins until maybe 6 or 12 months later. There's a lockup period, right? And so effectively other, market makers would have to resell these stable coins in the market to distribute them, right? If they want, and if they can sell it at $1, then they could, potentially lock in a profit, right? To arbitrage it. Well, what happened was these market makers, they're very smart, right? They took the discount deal from these much larger issuers with discount program, and they traded those stable coins for stablecoin, right? On Binance at basically near 1-to-1 exchange rate, right? And then they off ramp and they redeem our stablecoin off of us, right? And so that drained a lot of our reserve as well as burn a lot of our market capitalization for our stablecoin, right? And so, and I realized that not just one of them was doing this, several of them were doing this, right? So it was and they had a lot more funding and liquidity and incentives for these market makers. So we just knew right away that okay, as a small company, as a startup that is, organically trying to build a stablecoin business that doesn't have kind of like, the capital connection in order to bootstrap hundreds of millions of dollars or billions of dollar liquidity, we have to find our way, right? We have to find our way to survive in the stablecoin industry, but we still believe in the vision. We still believe in the opportunity, right? Because, it's the money market of the future, but on chain. It's the money order or the check, of the future, but on chain. It is faster, cheaper, borderless. It is the future, right? So
there has to be, maybe pausing on that point, Kory, there's a lot of good ones that you made. This idea that you're coming online in an era where you've got the biggest exchange. It's a lot of people trying to kind of lobby for attention and eyeballs. And really, when you're looking at stable coins, they're a cryptocurrency that's supposed to be backed to a stable asset like a commodity or or in this case, a currency, right? And there are kind of two ways to do it, into an asset or into an algorithmic backed stable coin. Maybe tell us a little bit about, why you felt that the world needed another stable coin at that time, because there were already a couple in there. What were you kind of thinking about that was potentially different at the time? And maybe what did you learn since?
Well, great question. That's exactly what I was asking myself back in 2019, right? I was in the middle of this war on Binance. All these big major stablecoin issuers, they were just like shooting each other, bullets flying everywhere in the battlefield. And we just stuck our head up into into the battlefield and hello, and then boom, right? And then, no, we can't do this. We can't continue doing that, right? We have to figure out a different business model. And so we decided that, we're going to, so in early 2020, we delisted from Binance and we pivoted stably into providing stablecoin as a service,
right,
as well as on development and advisory services for other organizations that might be interested in launching their own stablecoin, right? Mm-hmm. So I had a thesis from back then. I had the very same question that you have, right? That you asked me, like, why does there need to be more stable coins? Why can't there just be like one or two that is very big and like, everybody uses, right? Why does there need to be more diversity? So, starting at, beginning of 2020, we started asking ourselves this question, right? And my thesis back then in starting, this stablecoin as a service and stablecoin development and advisory firm or business line is stablecoins. Now it unlocks so many values and benefits as well as new opportunities, right? There are three things that a stablecoin can unlock for any traditional businesses, right? Number one is cost savings. Number two is earnings, more earning and revenue opportunities, and also helping boost, user demand, which, brings in more revenue, right? And three is, expanding brand power as well as market reach and, enhancing user loyalty and retention, right? As well as capital seekiness, depending on the business that they're in. So without going into too much details on that, right? These are the three, main benefits of, launching your own stablecoins, right? And so we realized back then that, there's a lot of traditional businesses, companies, not just financial institutions, even non-financial companies, right, that could benefit from launching their own stablecoin. And it would only be a matter of time. It will only be a matter of time before regulations come around, which is just, it is coming around now, right? It's been like,
that's probably a good point to pause on, Kory, is that's kind of where we found one another, right? So you guys had, this legacy business in kind of maybe the idea to kind of build a stablecoin was more that the category itself was just fundamentally interesting and kind of a real use case. Because even back then, the idea was, well, why do people need blockchains, right? Like, what does it actually do? You can't really buy anything with that. And then the stablecoin flipped that on its head because, fast forward to today, you have, last year over, trillions and trillions of dollars worth of transactions. I think it's close to 30 trillion and a 250 billion market cap on all stablecoins globally. But we came in and made an investment into this kind of pivot in the business where it was the stablecoin as a service. And I thought that this was very interesting because the idea that at the time, you have companies looking to go from Web 2 into Web 3. A stablecoin really provided them as this kind of fiat crypto on-ramp that was easy. It wasn't as volatile as Bitcoin. And it was also one thing when you mentioned about the regulation, it was something where I know that you guys spend a lot of time in those early days figuring out, how to be as compliant as possible, getting that scar tissue, passing that through to the clients, maybe kind of talking a little bit about some of those benefits that you mentioned. Going from Web 2 into Web 3, you're seeing many companies start to do this, whether it's PayPal or whether it's, potentially Visa, MasterCard. Maybe if you can talk a little bit about how, you're thinking about this as a way to on-ramp into crypto and like why companies are leaning in to do this, now more than ever.
Yeah, for sure. So when we first started, offering our stablecoin as a service and stablecoin development advisory services back in late 2020, early 2021, a lot of our early clientele were other blockchain foundations, right? Blockchain networks that, are emerging, but they don't have existing stablecoin infrastructure yet. They don't have USDC, they don't have USDT, or even bridge stablecoin on their network, right? So that's what a lot of our early focus started, tackling these, inefficiencies in stablecoin infrastructure in emerging blockchain networks, right? And so over time, as the industry mature, our clientele began, is starting, as of today, it is starting to, become a lot more colorful, right? We're now starting to see more enterprises and traditional institutions coming in and speaking with us, and they're, thinking about, okay, we're seeing Walmart, we're seeing, Amazon, we're seeing like, even Facebook back in 2019, they already thought about doing this. If you recall that, right?
Yeah, I recall that well, Kory. That was actually when Mark and I were kind of trying to figure out how do we get involved in that whole ecosystem because, I was kind of the tech guy. I built a fund. Mark, obviously, with Legacy and Morgan Creek. Our idea was, Facebook is going to be this global currency, right? At the time. And it got struck down by regulators, which maybe is a good point that we.
Yeah, that's fine. It doesn't matter. It's coming around, right?
Yeah, that's a good point. So maybe you can tell us a little bit about that now, Kory, where we're full circle, where you guys were early, but you learned the muscle memory required to benefit now. And the big thing we all want to talk about is the Genius Act, right? Because it's kind of showing that we're going towards a world where there's at least a more enhanced clarity. So maybe if you can kind of describe, why folks should be excited about that and what it is and how it could help, the Walmart or the Amazons of the world that are, trying to penetrate into Web3 and having their own stable coins potentially.
Yeah, for sure. So the Genius Act itself, right, is what does it stand for? Guiding and establishing national innovation for U.S. stablecoins.
Ah, well done.
I think I got that right. So it's designed to officially legalize payment stablecoins in the United States. Right? So it's the first stablecoin legislation to be approved by the Senate with bipartisan congressional support, right?
That's very hard nowadays.
Yeah, exactly. So it's also the first major digital asset legislation approved by the Senate in like history, right? So
yeah.
So that's, historic, right? So now it goes to the House of Representatives. It's likely going to be debated and maybe potentially amended or merged with the Stable Act, right, which is a separate but very similar stablecoin bill that was introduced by the House of Representatives, and possibly the Clarity Act as well, which is a more a broader crypto and digital asset regulatory framework bill. But anyway, right, for the Genius Act, right, it wants to is designed to legalize payment stablecoins. So what is a payment stablecoin under this act and the definition of this act, right? So under the Genius Act, a payment stablecoin is defined as a blockchain-based token that is redeemable on a one-to-one basis for U.S. dollars, and it must also be backed by high-quality liquid assets, right, such as cash or short-term U.S. treasuries, money market instruments, for example. And three is it must be primarily used for payment, settlement, including, P2P transfer, commerce, or, B2B transactions, right? So there are many types of, potential payment stablecoin issuer that could be permitted under, the Genius Act, right? So, but every single issuer must obtain a payment stablecoin charter, right? Right now in the United States, we have a patchwork of federal MSB regulation as well as state-by-state money transmitter licensing and regulations. So, existing company like Stably and even, Circle have to operate based on the existing framework in order to, issue and redeem or provide stablecoin services, right? But with the upcoming payment stablecoin charter licensing regime, that's all going to change, right? It's literally a reset for literally everyone, right? Everyone will have to get these new charter now in order to issue a stablecoin officially, legally in the United States, right? So you could be, you could obtain the charter on a federal or on a state level, right? So you could be either a bank or depository institution. The potential issuers of payment stablecoins could be banks and depository institutions, non-bank financial companies like MSBs, right, money service businesses, payment companies, trust companies as well, and potentially fintechs and digital assets companies as well, right? As long as they meet certain requirements and they have this payment stablecoin charter, then they are legally allowed to issue payment stablecoins in the United States, right? The federally chartered issuer, they will report directly to a national agency like the OCC, for example, right? State charter issuer, if they have less than $10 billion in total circulation or reserves, right, then they will report to their state regulator, but they will also need to register federally and meet some key requirements, right? You have to maintain one-to-one reserve all the time, in cash or short-term U.S. Treasury. No rehypothecation, right? You can't play around with customer funds. You need to provide monthly public reserve attestation, to verify that the money is there to back the stablecoin. Extensive or regular audits and risk management assessments, and have to comply with KYC, AML, CFT, OFAC obligations, all the acronyms, right? Including programmable restrictions like freezing and blacklisting, things like that, right? In order to comply with those, KYC, AML, and CFT and OFAC obligations, right? Also, no yield distribution. So it specifically said, these payment stablecoins cannot distribute yields, interest earning to their holders, right? Because then that, conflict with existing securities laws where, that could be construed as a security offering, right? Where, this needs to be strictly a payment instrument. So, but there's also a lot of strong consumer protection provisions as well. So, issuers must maintain full reserve. That's basic, fundamental, right? That's number one. User funds must also be held in bankruptcy remote account, right, or legal structure to ensure that in the case that the issuer of the stablecoin is it goes into insolvency or going into bankruptcy, right? Then there is protection on the customer claims for redemption of the reserve, right? And you generally you can't market these stablecoin instrument as FDIC insured or anything like that, right? So it's designed mainly for I think with a lot of consumer protection in mind, sure. Right? And that's what I like about this bill, right? Yeah, I've been in this space for a long time, and a lot of these things are what I have been advocating for a long time as well, and it's finally making its way into the law. So
absolutely, when I hear you describe it, it sounds like it's touched on a lot of the areas that were common complaints of some of the problems with our industry in the past, sort of the opacity, the lack of reserve, the lack of, proper disclosure, disclaimer language for, a retailer jumping into Web3, some kind of like low-hanging fruit, right? But if you're zooming out and kind of thinking about, well, why are we getting this push from our government in terms of stablecoin usage? A couple of things to me come to mind, and I'm going to respond in the least cynical way possible. And I'll just say that probably one of the things that I think it represents is that stablecoins could reinforce the US dollar hegemony, because we're seeing many more stablecoins being backed by US dollars as opposed to, let's say, Japanese yen, for example. But maybe if you can comment on if you find that that's true, that stablecoins are kind of reinforcing the dollar, and maybe, how that might kind of stand a little bit different from what Bitcoin was supposed to do, right? Bitcoin was supposed to be the store of value, but stablecoins have kind of shifted this back towards fiat, but using crypto rails.
Yeah, I mean, stablecoins make the dollar more accessible, right? More programmable and more borderless than ever before. Like, I think over 95, 97, 98% or so of the global stablecoin market is dominated by USDT from Tether and USDC from Circle, right? Both of them are US dollar denominated, backed by US dollar reserves, right? And so these stable coins allow individuals and businesses worldwide to store value, transact, settle, engage with decentralized finance, right? Without needing a US bank account, which is huge, right? In emerging markets, right? Like, especially like me personally, my family we're from Vietnam, right? And the Vietnamese currency versus the US dollar, right, is very unstable, and it loses a lot of value over time. So if people over there, they accumulate wealth over time, they buy gold or invest in real estate, or if they can, they would get their hand on a lot of US dollar, right? So in emerging markets like Vietnam and other places, Southeast Asia, Africa, etc., stable coins are increasingly used as a hedge against local currency volatility and inflation, right? And there's a lot of economic uncertainty, especially nowadays, right? With all the geopolitical uncertainties and volatility that's going on. And yeah, so, as a result of that, I think US dollar denominated stablecoin adoption, it's going to continue to accelerate globally, further solidifying the US dollar's role as the premier or world leading reserve and settlement currency. And now, in stablecoin form.
Yeah, no, I think that's a good framework and a good platform that we have set there. And also, shout out to Vietnam as well for stepping up into the Web3 game, with their official passage and green lighting of crypto, which is some welcome news, I'm sure, for you as well. So, if we're kind of thinking about this idea about liquidity and DeFi, kind of changing gears slightly. So if we have the idea of, how stablecoins are supposed to help in general for payments, right? And we have made a couple of investments at Morgan Creek into stablecoins. We've thought about the idea of remittances, which was a big one, to your point about giving people in Vietnam access to dollars in general as an investable asset, or at least as a store of value. And that, I like the word that you said, it's more accessibility when you have something like a stable coin. So you're hitting both of those things: accessible, store of value, global, and, an instant kind of settlement layer. But the idea here that we can think about this in the DeFi context, which, is in some ways a little bit apart from what the Genius Act is supposed to represent. And this is maybe where the worlds collide. So maybe if you could talk a little bit about this idea, and this also ties in a little bit into what Stably has done and really been known for as this, stablecoin as a service, and kind of helping out some layer one protocols have their own stable coins, and maybe that kind of eases their ability to have the foundation of DeFi infrastructure. Maybe if you can comment on, how stable coins have really become this foundational layer also in DeFi now.
Yeah, I mean, in DeFi, stablecoin has evolved to be a foundational cornerstone in pretty much every aspect, right? From trading to liquidity to lending and borrowing. Almost half of the outstanding debt in DeFi right now is denominated in stablecoin. It's based on stablecoin, right? So, and the rest of it is like, Bitcoin, Ethereum, and things like that. But stablecoin credit demand, as well as stablecoin, payment, settlement, and yield generation demand is increasing like exponentially. I mean, like you said, in last month or earlier this month, we passed $250 billion in total market cap for stablecoin, right? I mean, how large is the global M1 money supply, right? I think it's like 30 or 50 trillion dollar or something like that. And so stablecoin now is only 250 billion. So it's very tiny. But yeah, originally we started this stablecoin as a service and development services for, focusing on a lot of emerging blockchain network that didn't have their own stablecoin infrastructure. And, we have launched, more than 15 different stablecoin on different networks over the years. Working with names like, Ripple and Stellar and Tezos and VeChain and Harmony and Icon and etc. Right. So now we're starting to see more traditional players coming in, and, it's very satisfying to see that, they are, we're able to find, use cases and value creation opportunities to incorporate stablecoins into their existing traditional business model, right? Like before, I've only worked with blockchain and Web3 and, digital asset like organizations, right? But now we're working with more traditional clients. We're starting to see like how much of a, much more of a significant impact it could have on their, users and, ecosystem, right? I'll give you an example, right? Think about retailer, right? Now, I'm going to use Costco as an example. We're not working directly with Costco or anything, right? Maybe hopefully Costco reach out to us after they hear this, right?
Yeah, but as a Jersey dad, I love Costco. So
everybody loves Costco. I have a Costco receipt right now, right in front of my face, right? So
love that.
Everybody loves that Costco, right? How could Costco benefit from issuing its own stablecoin? Costco is a wholesaler, or like, a large retailer, if you will, right? And a big box, retailer, right? And they are not a financial company. So how could they benefit from issuing their own stablecoin, right? Well, you see Amazon and Walmart doing it, right? What's their motivation? Why are they doing this? So imagine Costco, right? You can now use Costco USD stablecoin, right? In order to pay for goods and services and transactions within the Costco ecosystem. What's that going to do? That is going to reduce transaction friction by 2 or 3%, because that is typically what goes to card payment processors, right? To Visa or MasterCard and, whoever in between, right? Many different intermediaries in between. And where does that come out of? It comes out of the consumer's pocket, right? Costco would have to mark up the price of their products or services in order to cover that 2 or 3%. Now, if the stablecoin could facilitate on-chain, blockchain power payment and settlement, and, there's no more 2 or 3% that, Costco has to share with these, payment services provider, then guess what? That 2 or 3% could actually be given back to Costco customer, right? Giving them a discount on whatever they buy in Costco, as long as they pay with the Costco stablecoin, right? There's your demand. There's your immediate unique ecosystem demand, bootstrap with, by Costco goods and services, right? But demand for payment for those goods and services is what, drives people to issue and hold these stablecoin on hand. Like, you're not going to go to Costco and like at the checkout line, you're like, let me go get this stablecoin, like, give me a few seconds. No, you're going to probably load it into your application or wallet or whatever ahead of time, right?
Right.
And then you're going to go to Costco and you're going to start paying it and enjoying, your rebate or your discount, whatever it is, right? So now Costco have a lot of, not only they have, achieved cost savings, right? Remember one of the things I said? Cost savings, right? What does cost savings enable? Well, if you save people 2 or 3%, maybe they start buying more, right? Now you might start having more user demand. Now you might have more revenue and potential profit from doing that, right? On top of it, you're sitting on top of a large deposit of fiat cash and, T-bills and money market instruments that are generating yield. It's generating float income, which, is a new source of revenue for Costco that they could either internalize or they could now redirect it into their ecosystem, right? More benefits, more discount, everybody. Yay, right?
So what we're thinking also, Kory, is a very like B2C use case here because, we go to Costco, we find the unique benefit, but maybe kind of like flipping it on the other side. Could you talk a little bit about for a large retailer like Costco, and potentially this is why folks like Amazon, Walmart have kind of now dabbled in stablecoins. Can you talk about like the B2B effect? Because obviously, these are Costco in some ways is a middleman, right? It has this large facility where it gets goods from one retailer and it sells it to an end customer, or in some cases, it will just white label the product altogether, just like Amazon has done for years. Maybe can you talk about like the power that a stablecoin could have from a B2B standpoint, and maybe have things like extended credit or managing inventory levels, because you could have immediate kind of settlement layers and having people get paid, which sometimes isn't happening on Amazon. Maybe any thought on that?
Yeah, exactly. I mean, programmability, right? Is programmable money, right? You now can create not just branded digital money, right? But it is also programmable, right? In order to advance your business into the stablecoin age, you not only need to have, the ability to provide all these unique benefits, cost savings, and, user incentives and things like that, right? You also need to have, technical advantages and over traditional payment system, right? Such as automated collection, payments, transfer, things like that, to make the process a lot more programmable and more automated and easier than, a traditional system, which, by the way, it's not 24/7, right?
Right.
Banking hours, holidays, and things like that. Those bankers love to take holidays, right? So that stable coins 24/7, baby. Like, anytime, the internet, as long as the internet is running, then, we can send, you can send stable coin to any B2B, any business, any merchants, any, end client in the world, right?
I think you kind of answered it implicitly here, Kory, but I want to maybe be even more deliberate, because we've seen some good news happen in the public markets, which to me and Morgan Creek, we're very excited when we see Web3 companies go public. One of the big ones that we saw recently was also a stablecoin company in Circle. Maybe if you can kind of double tap this idea that, for a merchant or for a large business like a Costco, getting an off-the-shelf stablecoin might not be in their best interest, and maybe how Stably can kind of help with that process of kind of giving them a more tailor-made solution as opposed to just, buying off the rack.
Yeah, no, absolutely. So before, we even start working with any client, I ask them two very basic questions, right? One, do you have a large user base with strong network effects, right? Now, large user base here doesn't necessarily mean quantity alone, right? Like head counts, right? User head counts, right? It could also mean quality, right? Maybe you don't have a lot of users. Maybe you have, a couple of B2B users, right? But they bring in significant volume or significant deposit or something like that, right? If you have a large user base with strong network effects, you have one of the primary ingredient in order to justify launching your own stablecoin. The second question I ask people is, does your business does any one of these three things, or all of them, or a combination of them, right? One, does it hold user deposit or balances or financial assets in general? Two, does it facilitate credit, right? Does it, facilitate lending and borrowing, right? Three, does it process significant transaction volume at scale, right? If you answered yes, these questions, yes, I have a large user base with strong network effects, and yes, I either provide credit or facilitate payments or have a lot of volume or whole user deposit, you're ready to launch your own stablecoin, right? Because now you can benefit significantly from, doing so. And again, those three benefits, I've been talking about this for 6 years now. I have a video of me on YouTube since 2019 talking about stablecoin as a service. We were talking about Walmart making a stablecoin, eventually one day, right? And I was literally talking about the same thing. What I said back then is the same thing I said right now.
What you've mentioned, I think, makes a ton of sense. And I think I'll go back to the quote that we tend to say a lot, whether it's the financial clients or in this case, it is folks that are kind of touching retail or CPG. They're not technology companies, despite the fact that they need technology to reach incredibly diverse sets of customers that are purchasing more and more things online. I mean, how about this, Kory? Recently, I'll give my wife a shout out. I just got her back her Costco card because normally I was doing the Costco shopping at home to make sure that things were flowing properly and, we kind of stuck towards a routine. But now that she's back in Costco, I noticed that she will also just buy Costco through DoorDash. So that's all sorts of connectivity, right? You're using another kind of, gig economy B2B platform, but then also now, Costco is part of this other alternative supply chain, which is using a lot of technology. So, no doubt there needs to be specialists such as Stably that can really identify, the three areas that are suitable for a client to even scale into this. But I think, we've gotten to the point of the podcast where we like to have a little fun, where we like to get to know you a little bit more. Mark usually tends to do these, but as he's away, I will do the heavy lifting of the internet famous lightning round on digital currents. And these are kind of quick answers to some questions just to get you could be known a little bit more by the audience. So probably like first question is, where do you go when you just need to get away from being the master of the DeFi universe?
Being the master of the DeFi universe? Ooh, that's a tall claim. But yeah, I mean, my wife and I, we usually like to go for walks, and we're in Seattle, so there's a lot of great trails and hiking areas that we can go to. So we enjoy doing that a lot, and it's the summer right now too. It's sunny, is nice. So every weekend we try to go hiking or walk around, nature and enjoy the air. It's nothing like it over here. I love Seattle. I can't complain. We got perfect weather over here too. A lot of people complain about the rain and stuff, but yeah, it's perfect.
What is one kind of hidden gem that folks should check out food wise when they go to Seattle?
Yeah, so I'm Vietnamese, right? I love Vietnamese food. Obviously, I always plug Vietnamese food, but for this occasion, I want to plug Filipino food. Oh, we got a lot of good Filipino food here in Seattle. There's one down in this South King County area in Kent, Washington, called Phil Cuisine. Big shout out to those guys. I've been eating there for 10, 12 years now. And man, those pork barbecue that they have is just to die for. So yeah, man, good food, good nature, good air. What more can I ask for, right?
Yeah, and probably we'll kind of have another question. Where do you go for inspiration?
Inspiration. That's a good one. A lot of my inspiration comes from reading philosophical work or ancient literature and even religious work, right? There's a lot of wisdom and knowledge from back in the day that translate into practical use cases in today's world. And what one of the things that actually inspired me a lot is the Tao Te Ching by Lao Tzu. If you're familiar with Taoism, right, the yin and the yang, right? So
we've got a little yin and yang going on right now with our cameras for those that are the light.
Yeah, but if a lot of the verses and his work, it is very reminiscent of how it's exactly how financial markets work, right?
Right.
There's a verse where he says, you only know beauty if ugly exists, right?
I love that.
And so yeah, you only know risk if yield exists, right? So it's that kind of thing, right? Mm-hmm. So the yin and the yang, and maintaining balance, right? Maintaining balance and harmony with the market, with the natural forces, and go with the flow, right? And being able to be stably, right?
Love that. And what's one thing, Kory, that you read on a consistent basis that you just couldn't live without?
Something that I read on a consistent basis that I can't live without. Oh, that's a lot of books.
I'll list off mine. So
Giving up.
answer. Thank you.
My wife's looking at me, and we gotta go to church later this weekend. So I'm gonna say the Bible. Right?
Oh, I love that. The good book, and kind of tying into the other point there about, kind of drawing some inspiration from texts of philosophy and religion. And maybe, this one could be a little bit of a longer answer, but, what is kind of the thing that you're working on now that's getting you excited? The next thing that maybe we should be on the lookout for?
Man, honestly, I can't wait until Costco launches stablecoin. You know how often I shop at Costco? Amazon, Walmart. I honestly, for me, I think between the Amazon stablecoin and the Costco stablecoin, I think those two will probably be the top, the top two, culprit stablecoin in my wallet. Because I use those, platforms significantly, right? So I will for sure get more benefit if I, have more of those. So maybe airlines, I don't know. I do travel on, I love Alaska Airlines. Shout out to, our Pacific Northwest airline here. But, yeah, maybe if Alaska Airline has their own stable coin with like miles rewards, like, in stable coin form or something like that, right? That could be super interesting. And yeah, I would definitely hold a little bit of that since I travel a lot.
Maybe Kory, if you wanted to give the listeners a little bit more insight on what's happening with the Trinity, is kind of like the next evolution of some of the workings at Stably. Maybe can you talk to the folks a little bit about what you've created, and of course we're gonna have to invite you back for a full deep dive on.
Yeah, for sure. Man, I was gonna save that for another podcast, but since you brought it up, let's dig into it. Last year we started development on a DeFi project that is very revolutionary, right? Basically Stably expanded into the DeFi space last year. We realized there's a lot of advantages in issuing a decentralized stablecoin protocol, and we wanted to, we have some ideas that we wanted to prove out and bring to market, right? And so we started developing what we call D-Trinity, which is the first subsidized stablecoin protocol in the world. The short of it is it's a stablecoin that pays you to borrow. Now, you probably never heard of that before. Have you ever even gotten paid by anybody to borrow money? No, right? You usually have to pay money to pay interest to borrow. But here, what we're doing with the Trinity and with, the latest, innovation, our latest innovation in stablecoin technology is we're trying to flip the traditional lending paradigm on its head by, enabling subsidized stablecoin loans for borrowers, allowing them to reduce their borrowing costs. And naturally, when you subsidize borrowers and they get to borrow cheaper, right, what do? They end up borrowing more. Not only do they borrow more, they might even be willing to pay the lenders more back in interest, right? So by subsidizing borrowers, you could actually increase credit demand, drive utilization, and return more yield back to the stablecoin lenders, creating, a very capital efficient and rewarding, flywheel that has never been tried before. And, we're very excited and proud to be like, the first stablecoin innovators and builders in the world to, bring this idea to fruition and continue to go to market and scaling it. And yeah, we launched it earlier this year. The Trinity has now grown to about $6 million in TVL. And we're getting a lot of exciting, partnership with some major lending protocols, credit markets, other stablecoin projects as well. I mean, we've been in this space for a long time, so a lot of these partners know about us, right? We even have, very notable backers, for the Trinity last year, including the founders of Frax, the co-founders of Sky and Convex. Some of these OG stablecoin DeFi founders, right? That that understand the magnitude and the impact of what we're innovating with here. So, but yeah, anyway, that, we can
a little bit of a teaser there, Kory. And I'm glad that it's just kind of representative of, what I've known from you is somebody who is just always at the cutting edge, and that intersection of technology, but then also practicality that, can actually be used by real people and have a real tangible benefit, as opposed to the question that we have been plagued by in Web3 is, do people actually use these things? Well, I'm here to tell you, yes, people actually use Stably. People actually use stable coins to make their lives easier, not harder, and kind of reduce fees and friction. So, with that, Kory, we'll have to thank you so much for your time and for joining us today on Digital Currents. Let the folks know where they can find out more information about you and Stably.
Yeah, absolutely. So you can visit our website at stably.io. We have also a link to a deck with an overview of our services that you can check out. Also follow us on Twitter at stably_official. And yeah, I will be very, for those that are in the industry, I will be, traveling to a lot of, stablecoin related conferences and events in the coming months. So, if you're around, would definitely love to get together and talk more about how we can advance stablecoin for the rest of the world. So.
Absolutely. I love that. Well, Kory, we'll definitely have to invite you back. I feel like we're just scratching the surface. And thanks so much for coming on Digital Currents. And we're a reminder, listeners, as always, rate, review, and subscribe. Spread the word about the podcast. That's how folks come to find us more than anything else. And we'll remind our listeners, as always, to stay current. Thanks, Kory.
Thank you, Xavier.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.